All right, so the last thing that we did, we just completed our adjusted trial balance. So here with our adjustments, we balance completely 100% our debits and our credits balance. So now the next step to do is to finally start our financial statement. So the first one that comes first is going to be the income statement. So as you can see, there are a few things that you need to have when it comes to creating your income statement. So let me make this a little bigger and a little wider. Okay, so with that being said, our very first things that we got to do is we got to figure out what our total sales are going to be, and we're going to subtract out our cost of goods sold, as well as cost of goods, cost of materials, as well as every single operating expense that has occurred to determine whether we made a net profit or a net loss. So with that being said, this is exactly why I wanted you guys to make the sums of each main account, for the reason being is because you don't want to clutter your financial statements. With sales, I don't want to see sales medium coffee, sales regular coffee. It's just easier if you could just sum everything up. So in here, we're going to look at our operating income. So the first thing that we know is that we have sales. So here, don't refer this as your debits and your credits. It's just a blank form. And how I'm going to use it is the left side is going to be my calculations. My right side is going to be my totals. So let's go ahead and get started with our operating income. So the first thing we have is sales. And I already solved that in my adjusted trial balance. My total sales here, so I'll make this bigger so we can see. It's a little too big. All right, so we can see, let's look up our sales. So here is, sales is right here. I have a total of $30,549 worth of sales. So that is actually what I'm going to do in my income statement. Now, what you can do is if you're using Excel, the great thing about Excel is you can go ahead and cell reference between the same workbook, same worksheet. So that's what I'm going to do here. Since I've located my sales, I'm going to go ahead and grab that answer, and I'm going to fill it in here. So here, $30,549 is my total sales. Now, the next thing is your sales returns are going to affect your total sales. So what this is going to be is, well, what was my total returns? Okay? And how you want to place it in here, you can either place it as a negative number, or you can have it in parentheses to determine that it's negative. And I'm going to go ahead and go to my adjusted trial balance, and I'm going to go ahead and locate it. My sales returns and allowances was for $18.96, which I've indicated as a negative number. All right. And then lastly, I'm going to go ahead, and another thing that reduces sales is your sales discount. So here, my total sales discount was for $1,979. I grabbed that answer. There it is. It's in negative. And now I'm going to calculate my total sales. So my total sales, right, I can either use equal sum or I can just add them all up. In this case, I only have three things, right? I only have a sales returns, a sales discounts, and those are the only things that affect sales. So my total sales here is going to be for a grand total of $28,579.74. All right, so I took my total here of sales, subtracted my returns, subtracted out my discounts to get me a grand total of sales here. Okay. Now the next column here is going to be the total goods sold. Now, this one is going to reduce your sales as well, because the very first thing that you want to make sure is at least the cost to sell your items is covered first, and whatever is going to be the remaining is going to cover the cost that took for your business to operate in general. So in this one is directly related to the sales, right? It's us calculating how much it cost us to sell my inventory, and also the items that contributed to the selling of my inventory. So the cups, the sugar, the creamer. So these are going to go against that, and what you're going to get is you're going to solve for a gross profit, meaning this is the final number, or not the final number, but the gross profit is meaning before you subtract all of your other expenses. So first we subtract out our direct expenses. So in this one, I'm also going to do a negative, okay, to indicate that that is also going to be a number. So I'm going to go ahead and go to my adjusted trial balance, and I'm going to locate where my cost of goods sold is. So my total cost of goods sold was $3,992.51. All right? That's how much inventory I sold. All right? And then we're going to go ahead and look at our cost of materials, which we solved for was $10.40.79, right? Cost of all the materials, the cups, the sugar, the creamer, right? So go ahead, tell me, let's solve for our gross profit here. Can someone calculate that for me? So if I started out with my 28,579.74 and I have my cost of goods and my cost of materials, what is my total gross profit? 23,546.44. So this is my total earned income that I've accumulated, right, over the course of 2 weeks. Okay, so that means we're doing good. We're at a positive right now, but now we need to calculate all of our expenses it took for us to operate our company. So that means every single expense that you can list out. So this is where we're going to go ahead and go to our adjusted trial balance, and we're going to look at our operating expenses. So the very first one is going to be my advertising expense. I had bank fees, I had business expenses, I had, well, since freight expense was zeroed out, I don't have it anymore. So you understand where I'm coming from. So I'm going to be picking out all of this information. So let's start from the first one. I have advertising expense, bank fees, and business expenses. So that's what I'm going to list down here. All right. So I have advertising. Okay, let me go ahead and reformat that so it is left aligned. All right, I have bank fees, and I had business expenses. All right, so now let's gonna go ahead. I'm just gonna add them all up together. So what was my advertising expense for? What was my bank fees for? $835. I'm gonna take the blue one. Oh, I meant to just do this one. All right, and then my total business expenses was for the 1282. Okay, and then what other expenses did I have? I have insurance expense, labor expense.
So in other words, if a one is zero, you don't necessarily have to put there anymore.
Because that has no effect on insurance.
Then there's like that it's part of the expenses. But if it's zero, no need to.
Because it will not affect your it will not affect your income whatsoever because it's zero. Okay, I have labor expense. I have license. So what was my insurance expense? Mm-hmm. What was my labor expense? I totaled this one up. Hmm. And then what was my business and license and permit expense? Okay. So I also have loss on disposal of asset. I also had office supplies expense. And I also had payroll expense. Okay, so what was my total loss on disposal of assets? 2,000. Oh, 2,000. My supplies was 70. I'm just gonna copy it so then keep it consistent. 13, 33. Okay. And then let's see what else I had. I had purchase expense. It's zeroed out. Purchase returns and allowances is a contra, so that's also zeroed out. I have rent, bad debt, depreciation, and amortization expense. Right, so I had rent expense. All right. And let me see, what was my rent expense? It should be 1,500. My bad debt, 76.50, 60. And my depreciation and my amortization. All right. So then I'm going to go ahead and total all of those expenses and add a negative because that's what you're going to subtract from my gross profit. Okay. So I'm going to go ahead and add a little line here to indicate this is my total operating expenses. So total operating expenses, right? And I'm gonna okay, so what is my total operating expenses? Okay, so let me zoom that out for you guys so you guys can calculate that. So what's my total operating expenses? 10,693,73. Good. Right? Now, we also have to add in any other income. Right? So I'm going to go ahead and write other income. And do we actually have any other income? Did we have any other income?
Would it be the delivery income? Is that other income?
Correct. The delivery income is considered other income, right? It's not part of your business. It's what you charge your customers for having it delivered to you. So in this case, in my income statement, I have a delivery income. And for what amount is my delivery income for? $300. And this is going to add to your income, of course. All right. So let's go ahead and solve whether you had a net income or a net loss. So what you're going to do is you're going to grab your gross profit. You're going to subtract your total operating expenses, and you're going to add any other income. All right. So can someone calculate what that is? If I started with 23, 5, 4, 6, 44, I need to subtract my 10, 6, 3, 73, and I need to add my 300. 13,152,152.71. Yes, that means I have a positive number, meaning this is my profit. Wow, I had a large profit. That means we're doing good. Okay?
The total expense, how many percent did we actually get the company?
If we started with 23 and we ended with 13, that's almost 50% profit. I think it's about like 50 something percent profit. All right, so we did good. Okay, so now that we have this net income, now we can go ahead and solve for our equity, statement of equity. Okay, so of course, the first thing is we're going to do is we're going to have our beginning balance as of 6/1. So what was our beginning balance in our equity account? Sorry, that's a little too big. What was our beginning balance in our equity account as of June 1st?
30,000.
30,000. And I'm just going to copy that from our table over here. So my equity, owner's equity was for $30,000. Okay. Now, other things that affect other things that affect equity would be if we either reinvest in our company with our income, our profit, or we pocket that income. Now, that was a lot of money. $13,000 profit. I'm going to reinvest it because that's the smart thing to do. So what I'm going to do is I'm going to go to my income statement, right? That's where I solve for my profit. And I'm going to place it there. All right. Other things that affect equity would be whether you made a withdrawal or a capital contribution. In this case, I did have an owner's withdrawal. I withdrew twice for the amount of, in total for $3,000. Oh, my bad. Okay, so here you go. I'm here. I'm going to copy in my adjusted trial balance my withdrawal for the $3,000. Okay, so that's going to decrease your equity. So with that being said, I'm going to go ahead and total up my total, what do you call it? My total increase in equity. So it's going to be the 13, obviously minus the 3,000. And we are supposed to increase our equity by $10,152.71, bringing my brand new grand total of owner's equity to be $40,152.71. So wow, our value of the company has risen by $10,000. Okay, so this number right here is very important because when you do the next statement, it's going to be totaling up your total assets, totaling up your total liabilities, and then of course we already solved for our owner's equity, which is the new amount, which is the 40,000. Okay? So that's why every single statement that you do, it starts to be a part of each one. You need to complete the income statement in order to complete the statement of equity, in order to complete the balance sheet. So with that being said, we've completed the first two. All right. So now let's go ahead and complete our balance sheet. So here we're going to do the same thing that we always do, except instead of looking for our debits versus our credits, we're going to match our total assets versus our total liabilities. And of course, we add our equity. All right. And we need to make sure that the number one thing is that our assets equals our liabilities and equity, which is the reason why it's called the balance sheet, right? We're trying to make our accounts balance with the information that we have. So in this case, again, that's why I had you guys do the sums of the main accounts, because now instead of cluttering your entire balance sheet, you have the main accounts to make it nice, sweet, and simple. So let's go ahead and start with our first assets. So our first row of assets is going to be the bank, okay? We have the bank, we have accounts receivable, we have business supplies, we have office supplies. So let's do those first. So first things first is the bank in our balance sheet, because that's the first asset that we have is our bank. Okay, and how much is that one for? For my total bank, I should have. Okay, good. So the next thing I had was my accounts receivable. All right, and that should be for my accounts receivable. Mm-hmm. All right, that includes the allowance for doubtful accounts. All right. Next, I should have my business supplies. For 510. Good. Next, I should have office supplies. Right, these are all my current assets. Right, if you want to, you could be specific and label it that way. But in this case, I know what my assets are. I don't need to add more clutter to my balance sheet. So how much is my office supplies for? Oh, I guess I didn't place it in here, but I'll go ahead and take it there. So 80 for office supplies, okay? What about my inventory? It is for the 628.20. Good. And then I should have, what's next? I should have, go ahead. What, furniture? Where am I here? I have furniture. Right, and I should have office equipment. I should also have regular equipment. Okay, so let's go ahead and, what's my total furniture? Mm-hmm. What is my total office equipment? Office equipment, 2767.76. And what's my total equipment? Mm-hmm. And then I should have the rest of my accounts. So vehicles, I should have vehicles. Then prepaid deposits and goodwill. Okay, so I have vehicles. Prepaid accounts, deposits, and goodwill. All right. So what are my vehicles for?
31,951, 22,
Mm-hmm. And then my 17.
17,
Mm-hmm. My total deposits
1,700,
1,700, and my total goodwill 2888. Good. All right, and those are all my total assets. So I'm going to go ahead and equal sum this. And what is my total assets?
I'm using my calculator.
That's fine. Oh,
78,632.85.
78,632.85. Okay. Now, next is going to be your total liabilities. So let's go ahead and take a look. All right. So, yes. Total liabilities. Our first liability that we have is going to be our accounts payable. Accounts payable, Visa payable, sales tax, payroll tax. Okay, so here you go. Balance sheet. My total accounts payable, Visa payable. Sales tax payable. And I think I have loans is the last one. Okay, so let's go ahead and find out what our total liabilities are. So what is my total liabilities for my accounts payable? Mm-hmm. And then for my Visa payable, 1885.89. Good. And my total payroll tax liabilities,
11,
that's sales tax payroll liabilities.
791.54.
Yes. And then my sales tax, the 2000. Mm-hmm. All right. And then I should have loans as my last liability on here. Yes, loans is my last thing, which is the truck loan. All right, so balance sheet. So that means my loans should be for the 29-21. Okay. So go ahead and total up your total liabilities and what you have here. $38,480.14. 48,480.14. Good. And then lastly, we're going to take our equity, right? Owner's equity. All right. And what was the amount for my owner's equity? All right. Add those two up together to get your total liabilities and equity. And what do we get? Perfect. And do our total assets equal our total liabilities and equity? Yes, they equal. And that's how you complete the balance sheet. All right, with simplicity by using the main accounts. And yes, we apply the accumulated because they're all contra accounts. So again, we're not looking at debits and credits. We're actually looking at the total amount of assets that you have versus the total amount of liabilities that you actually have. So now this section and this financial statement is complete. All right. So with that being said, we have our last and final statement here. It's called the statement of cash flows. Now, this one is actually very difficult. Yes?
Ben, I have a quick question.
Mm-hmm.
About the owner's statement of equity.
Mm-hmm.
On the balance sheet, you said that the owner's equity was 40,000. Can you explain how you came up with that? I know we had a beginning balance of 30, and then we had net income, and then owner's withdrawal.
Mm-hmm.
So just explain to me how you came up with that amount of 40,000 and something.
Okay, so the whole purpose of equity, right, is basically to determine the value of your company. So usually your beginning balance is usually what you invested in. Okay? So this is what you invested in was the 30,000. So that's what you started out with. Now, a profit, if you reinvest into your company, then you're going to increase the value of your company. So in this case, I wanted to do that because I just started my company. I shouldn't be pocketing this $13,000 for any reason. So I'm going to reinvest it so I can either repurchase more things, maybe buy new upgraded furniture, maybe buy I don't know, a DJ booth, whatever. Something that attracts more customers. And that's what you do when you reinvest into your own company. So because I had a net income, meaning I had a profit, therefore it's going to increase my equity, right?
Got it.
And then the next section I have to do is I need to calculate, well, did I make any extra capital contributions? Did I contribute any of my extra money into the company? No, I didn't. However, I did withdraw from my company. And when you withdraw from your company, you're pulling money out of your company, meaning it's going to lose its value because it's no longer worth what it is anymore because you pulled that money out. So in this case, here I had a profit of 13,000. I had a withdrawal for 3,000. So therefore, I have a total increase or a possibility to increase my account by $10,000. And that's what happened here. I added, so this is what I increased my equity by. I increased it by $10,000 to bring me my brand new grand total to be 40,152.71. Okay, so this is my
Perfect.
brand new value. Okay, and usually what happens at the in your balance sheet is you're testing it to be holding for the end of the month. So that means you need to apply your ending balance in your owner's equity, which was $40,000. Okay, so again, we complete the step number one, which is income statement, to find our profit or loss. Then we complete the equity, whether we reinvest or not, to solve for a new equity. And then we do the balance sheet.
Okay, thank you.
Mm-hmm. All right, so again, last sheet we have here is called the statement of cash flows. It's very interesting, but I can tell you this. This is one of the most complicated worksheets I've ever dealt with. Now, I'll go ahead and explain so you guys have some kind of familiarity with it. But if for any reason you never, ever, ever balance or your numbers don't ever match, I cannot help you, okay? However, I can teach you exactly what it really is. So, what the statement of cash flows does is, again, it is basically taking from an accrual basis and then bringing it back down to a cash basis. So, everything that you've learned about accrual, forget about it because you're going to reverse everything and convert it into cash. Because the statement of cash flows is it's determining on what actual cash do you actually have in your hands and how much cash are you actually spending. So that's the whole cash flows, right? We're looking at how much cash is actually flowing in and how much cash is actually flowing out. So with that being said, this is how you complete the actual statement of cash flows. So where it's categorized into three different categories. You have your operating activities, your investing activities, and your financing activities. Now, typically, what you're going to be dealing with mostly when you're dealing with in your in each category is basically all your assets, liabilities, and your equity. So things that affect this, for example, is going to be for the operating activities is anything that's current. All right, so your current assets and your current liabilities as well as your other assets. Okay, and typically, so because as a current asset, we also have to figure out how we convert our accrual basis, so such as accounts receivable. Is that really money we earned? Is that money we actually have? No, it's money that we will have, but we don't have yet. So that's why we have to complete it here and compute it in here so we can be able to see how much money we actually have. So that's part here. And then our investing activities is going to be dealing with what we actually place into a company, such as buying fixed assets. So that's that portion. And then lastly, financing is anything that is going to be a long-term liability. So if we got a loan, that's us getting money, correct? And etc. And it will make a little more sense as we go ahead and fill in our gaps here. So obviously the very first thing that we're going to do is when we're dealing with the statement of cash flows is how much money did we actually receive from all of our sales. So what was our net income? And that's going to be generally what your first thing is going to be. Because technically all of the money that you received from net income was pure cash, right? They were all cash sales. So we're going to go to our either income statement to grab this number or, yes, so here, 13,152.71 is what we're going to start out with, okay? Now, the very first thing is that we can't forget about our non-cash transactions because those, right, we've calculated it in our system because we're doing an accrual basis. But in reality, we didn't actually spend this money. So now we have to convert those cash, non-cash transactions and place them in there first before we go ahead and do our actual physical cash ones. So the first thing is, for example, all right, what was the very first thing that we did when we had our business? We sold our furniture. And what happened there? We had to do a non-cash transaction, was reporting an invisible loss, right? We had to. You can't lose $2,000 when you don't physically have it. So that is going to be one of our non-cash transactions right there. So that's the first thing I'm going to do. And what I'm going to do is I'm going to add it back into my loss on disposal. Okay, I'm going to add that back into my accounts because that is something that I reported in my ledger or in my journal, but it really is a non-cash transaction. So let's go ahead and go to my adjusted trial balance. And how much was my loss on disposal of asset? No, okay, I can't find it. Loss. Right here, loss on disposal of asset. $2,000. So we're adding that back into our accounts. All right. Other non-cash transactions are going to be bad debt expense. Yes, that's definitely a non-cash transaction, is because you cannot write off invisible money, right? You just never received it in the first place. So that's considered a non-cash transaction because you're treating as if you had the money, but you never received it. So in this case, it's a double negative. You never received the money in the first place. So you have to add that back in as well because we calculated it as bad debt expense. All right, and what was that bad debt expense for? Bad debt expense. So we're adding that back into our system. Okay? And then, of course, another non-cash transaction is depreciation. Depreciation expense is where depreciation expense. So what this is basically what we did was we try to utilize our machine, right? We're expensing it, but what we're doing is we're transferring the amount. Now, due to the historical cost, right? Your asset is still going to reflect as whatever you purchased it as. So what this little notion here is, it's basically a non-cash transaction to kind of show you that you are using the asset and it's losing its value over time. The more that you use it, it's losing its value. But in this case, it's considered a non-cash transaction. So if you have depreciation expense, of course, you're going to also have amortization expense because they are technically the same thing. All right. So how much was my depreciation for? $6,251. And then my amortization expense was for $1167. Okay, so everyone with me so far? Yes?
Yes. Yes.
Okay, so now that we completed our non-cash transaction, now we can go ahead and proceed with our actual ones we have on hand. Okay, so the first thing that we're going to do is, well, not the first, sorry, or the next thing we're going to do is we're going to look at our current assets. So you can either go to the balance sheet to get your current assets. Okay, so for example, here, my current asset here, I have accounts receivable, right? In this kind of sense, do we physically have the money in our hands?
No.
No, because we never received it in the first place, what we have to do is we have to convert it. So in this case, we never have the cash in the first place. So we can't count it as cash. So what we have to do is we have to subtract it. So a good key way to actually kind of recognize it is you're going to add your non-cash expenditures. You're going to subtract your current assets and other assets, and you're going to add back your current liabilities. So in this case, my first one is accounts receivable. Because we never got the cash in the first place, right? We can't count it as part of the cash that we have. So we have to subtract it. And what was our amount here? Okay, so we can't use this one because this one includes our allowance for doubtful accounts, which doesn't apply. So we're going to have to go to the one from our adjusted trial balance for, okay, for the actual amount that we are supposed to be pending to receive. So in this case, I'm supposed to be pending and receiving a total of the $1531.95. That's how much money, because what I did here is I also added back the bad debt that I was supposed to take away, right? So here, in a sense, we need to, that's double dipping, right? If I'm already counting for the current amount of accounts receivable and I'm re-adding back in, that's double right there. I don't know if that makes any sense, but let's just go ahead and continue. So we subtracted out our accounts receivable. What's the next current asset I have? Okay, I have business supplies, I have office supplies, I have inventory. Okay, so all of those are going to be things that you don't have yet, right? So for example, office supplies. Did you utilize all of it yet? No, but what you have in this sense is you still have it, you already made the amount, you already paid for it in advance. So that's what this notion is for the business supplies. You need to subtract it because this is money that you could potentially either use or sell. Okay, and my business supplies is for a grand total of 5, 10, 10. All right. Same thing with your office supplies, right? If you don't use it, you can either sell it or replace or return it. In this case, we can't do that. So my total office supplies I have now is for $80. Okay, and I'm subtracting because I still have that amount. I haven't used it yet, and I've already spent the money for it. So that's what this notion means here, right? Same thing with your other assets. So here we're going to skip furniture because that's considered a fixed asset, which we will place it in our investing activities. So we're going to skip all of that office equipment, as well as your furniture, your vehicles, all of that, they're all considered fixed assets. So those are all going to be under investing activities. So all I have left is my prepaid deposits and goodwill. So I'm going to go ahead and include that all right here. Prepaid deposits and goodwill. Okay, so again, these are all going to be for what my prepaid accounts is going to be for my 665417, right? It's negative because I could potentially get money out of it, but it's also money I've already spent. I don't have that money anymore. So same thing with deposits, right? You've already spent the money, you don't have this money anymore, so you need to subtract it out. And then same thing with goodwill. Now with goodwill, because we also added back our amortization, you need to put it for what it originally was for. So in this case, it was for 2,100. Okay? And then now we go ahead and move along to our current liabilities. So in the aspect of current liabilities, right? This is money that we owe. Did we make a payment to it yet? No. So therefore, that's money that we actually have, right? Understanding the accrual basis means that, oh, okay, well, this is money that we are going to pay. We haven't paid it yet. So therefore, we need to add it back to our cash because we haven't made the payment yet. So here we have accounts payable, a Visa payable, sales tax payable. We haven't paid the government yet, and we haven't paid for the taxes that we owe, and as well as the salaries and commissions that we accrued. So all of these are going to be added back in there. Okay, and loans is going to be part of financing. Okay, so I have 4 things I need to add back into my account, and let's go ahead and process those in there. So I need to add back my accounts payable because I still have the money. Same thing with my Visa payable. I haven't paid them yet, so I still have the money. I haven't paid the payroll liabilities yet. I still have the money. And lastly, I haven't paid the sales tax yet. All right, so I have to add those numbers back in there. So the amount of payables that I owe, all right, accounts payable, I owe $4,000. I also owe for my Visa payable $1,000 that I still have, so I can add that back in. I still have $791 of payroll tax I haven't paid, and I still have $2,046 worth of tax I haven't paid. So what you're going to do is you're going to get your net total of operating activities. So because I placed it all my positives and all my negatives here, I'm going to go ahead and do an equal sum. So I added my non-cash transactions. I subtracted my current assets and other assets because of their money I've spent already. And then I added back all my current liabilities because those are money that we actually still have. We haven't paid them off yet. So my
Lynn,
yes,
Lynn, can you just repeat it again? Net income plus
net income. You're going to add so what I did here is I made a column here, so I have a total of operating activities.
this is operating net income plus. I want to just have an equation here.
Okay, so you're going to start off with your net income. You're going to add back your non-cash transactions.
Right.
Okay? You're going to subtract all your current assets and your other assets because those are money that you've already spent and that you don't have.
Current assets and other assets.
Correct.
Minus.
Mm-hmm.
Okay.
And then the last thing you're going to add back your current liabilities because this is money you haven't paid yet. All right? And by summing up my total operating activities, I have a grand total of a negative $603.80 in my operating activities. Now, I don't need to calculate it just yet because that's towards the end of the table.
So, the net income was not added with your calculation there. It's just that basically all the operating activities, basically
Correct.
whatever that.
Correct.
Okay.
Correct. Now it says net operating activities, so that means this is the total of it. All right. When we get down to our total, actually, wait, hold on. No, you're right. You're right. You're right. Right. This is supposed to be added with the. So here I'm gonna do the sum here. I don't know why it's not colored. Okay, so equals sum. Okay, so I do my equal sum here in my left hand corner. I mean right hand corner. So I have a negative 603, right? So net operating activities mean is what's going to happen. What is the difference between these two numbers? So you're going to add your net income. Oh, hold on. You're going to add your net income plus your net operating to get your total amount that you should have now with the cashes. So this is after, because it's the word net, meaning it's everything that's taken out. Okay, so there it is right here. So to help you out, you could have total operating. Okay, and I'm gonna go ahead and place that right here. So you have your total operating activities, and here's your net, meaning the difference between the two. Okay. All right, so now we have to go ahead and look into our fixed assets. Now here's the catch. This is what you invested into the company. So hence the word investing. So the first thing that we did was we sold our furniture. That was the first thing that we sold. And what did we receive from it?
Oh, yeah, so
How much did we sell the furniture for?
it was 2,000.
2,000. It was for 2,000. Okay, it's not in our whatchamacallit. It's not in our any of our tables. It's something that you have to add back in because it's one of those things that we received cash for. We received cash because we made a sale on the asset, right? Now, everything else that you have to do is you're going to reflect the historical cost because this is us purchasing, hence investing into our company. So the first thing that we did was we purchased furniture. Okay? And then we also purchased office equipment. And we also purchased our equipment. And we also purchased a vehicle. Okay, to get our total investing activities. So here we need to get the historical cost of our total furniture as well as our total office equipment, etc., etc. And because we made a purchase of it, it's going to be negative, all right? Because it's money we don't have anymore. We've spent it in order to invest in our company. So in this case, purchase of everything is going to be negative. So, and another thing too is because we've already added back the depreciation expense, that is one of the reasons why you have to label it as its historical value cost. So, going to, you can go to your adjusted trial balance. So what's going to happen is you're going to go to each category. So here for furniture, when I find furniture, so furniture. So this number right here reflects our purchases, but it also reflects us subtracting out our depreciation. What you can do is you could do another little sum on the side because this isn't what this isn't part of the trial balance or the adjust, yeah. And what we're gonna do is we're just gonna add the sums of our furniture right here. So here is my total that I originally purchased it for. All right, I'm not gonna add or I'm not gonna subtract out my depreciation. I'm just gonna add up my total amount of furniture, and I get a total of $9,033.75 for my total furniture. Okay, without any adjustments to it. So for my statement of cash flows, again, because it's money I've already spent to invest in my company, I'm going to go ahead and grab this number, and there you go. It's now negative. Same thing with your office equipment, right? You're going to go on the side, and I'm going to equal sum. Well, in this case, I only have three things. So I'm just going to add this plus my register together to get me a grand total of $2,863. And I'm going to go ahead and do that for my equipment just so then I don't have to go back and forth. So I have my coffee brewers and my coffee grinders. And then, of course, my vehicles, I already have it in grand total, so I don't need to do anything there. So going back to my statement of cash flows, I know that I need to subtract out my total office equipment, which I solved for was $2,863 right here. I also need to place in the equipment that I purchased, which was for a grand total of $8,000, right? $4,000 for the brewers, $4,000 for the grinder. So I need to subtract that $8,000 investment there. And then lastly, I also need to subtract out my car that I bought because I don't have the money anymore. So that's why I need to subtract it out. So here, I originally bought it for $32,208. All right. So then I'm going to get a total of my investing right here. My total investing should be negative 50,000, and I'm going to add that against my net operating right here. All right. So now I have a negative 38,000 in my net investing, which is okay. You're okay there because this is what I paid for in order to invest in my company. Now, the last thing is going to be financing activities. So what this one's going to entail is it's going to entail your loans. All right. Anything that you borrowed money for, right? In this case, it's a positive because you actually received money. And what did you do with that money? You bought a car with it. So that's going to be a positive number. So we're going to go to our adjusted trial balance and we're going to find our loans. Okay, so it's loans, right? I got the loan for $29,221.90. And that's going to be a positive because that's money I received because I borrowed it. Okay? And then the last thing that does affect your financing is obviously going to be anything that affects your equity. So that includes capital contributions. That's a plus because you're adding money to your company. But another thing that also affects it is if you were to do an owner's withdrawal. Okay? And that's going to be a negative because you took money away from the company. You don't have that money anymore. So now I gotta do one more insert here. So I have my total financing. Okay, and I'm gonna place that on my left side. And let's go ahead and add that total together. All right, so I have a positive 26,000, and what I'm gonna do is I'm gonna add these two together. So this is how much money I supposedly have spent because it's negative now. So what we're gonna do is we're gonna see, well, what did I originally start my amount with? When I started in my cash account, how much did I actually start with? Let's go all the way back to the beginning, right? In my first trial balance, what did I start my bank account with? As of June 1st, right? Let's go back and rewind. What was the very first transaction I did when I opened my bank? What did I deposit my bank account as? What did I start with? So I'm going to go to my,
30,000?
the what?
Is it the 30,000?
Okay, no, that's not what I started my bank account with because what happened there? I didn't start out with 30,000 because I made so many purchases before that. So I'm sorry, I meant to say go to your journal. So the very first transaction is how much money did I actually start with?
$21,625.
That's exactly how much you started out with. See? And I think that's going to freak out because that was 21,625 is what I started out in my bank as of 6/1. Okay? And then I'm going to go ahead and what's going to happen is this is going to be a formula. This is going to be what you started with plus the net in financing activity. So this is the number that you're supposed to solve for. And this number here is supposed to reflect how much money is in your current bank account as of June 30th, which in this case, it is not. If I go to my balance sheet, actually not my balance sheet because that's not my checking. I have to go to my trial balance. Okay? So what am I supposed to actually have in my bank account? I'm supposed to have 12,000. So I'm off by a lot. But that's the general rule of thumb. And here's a great thing for you guys. You will not be tested on it. Like I said, it is very complicated. There may be a few things I'm missing. Again, me and Mr. Sanchez have been working at it for the last 2 years now. Not one bit can we find this. Now, I tried doing it on QuickBooks, still unsuccessful. So,
If we go to the formula again, this the final formula.
the final formula is supposed to be your beginning balance plus your net financing activities. Remember, because we took each one, right? We started off with our net income. We had a total of operating. So here's the net value of it. We need to calculate our total investing, and then that's what the net value is. We took this number, added this number to it to get a negative 338,000. Then what you're supposed to do with your financings, you add up the total, and this number is going to be this plus this. So I have a negative 11,000. Now this is just saying this is how much money I spent. So I mean, looking at it, you started out with 21, and in your bank you have roughly 13, right? And in reality, that's not what the answer is. So that's why usually when I do this, it's supposed to be whatever amount that you have in your current
Can you show this
balance.
formula in the box?
In the
Can
box?
you go
Okay.
to the, yeah, just I want to read.
That 9642 had,
No, 9642.
Oh, hold on. I'm getting very confused right now. Just give me 2 seconds. Okay. So this 9,600,
No,
right?
just go to that. If you go there, we can see it.
Oh, okay. You just want to see the formula.
Yeah.
I just added them two together. This number with the net operating.
I'm sorry?
I just added the beginning cash plus my this.
Plus the net finance activity?
It shouldn't be 30,000. I'm sorry. Hold on. I just messed up the
Then
formula.
because of 964.
Yeah, hold on, hold on, hold on. I just messed up my formula. Okay.
Plus 21 enforcement, support processes.
No, it's only supposed to be this number plus this. Okay.
21 plus, I'm sorry.
Even if you try that, you're still off by a lot.
Okay.
It's supposed to be what you started your bank account with. Okay, and what it's supposed to reflect is going to be your 12,000 in your cash account. Cash. It's supposed to be this number right here. Because that's how much cash you actually have. Okay? But in this case, we do have a discrepancy of a lot. It's about, you're roughly off 3,000. Again, this, I've been working on it for quite some time with Mr. Sanchez, and we can never get it to balance. Yeah, this is supposed to be the ending balance in your cash as of June 30th. All right. So again, I'm not going to test you on it. Extra credit if you can figure out what the issue is, if you can get it to balance. But like I said, me and Mr. Sanchez
This
spent about
means
2 years. Yes,
they should be balanced with the cash in hand in the bank checking account.
correct. This is the number it's supposed to be. This is what my number I get. So it's supposed to be 12,578.
How you got that 12,578 from?
It's from the adjusted trial balance, right? That's how much money I have in my checking account.
Okay, 12,578 80.
Mm-hmm. Mm-hmm.
So right,
Mm-hmm.
the balance, right?
Mm-hmm. They don't balance at all. Okay. But
It can't be balanced, Lynn.
uh-huh. Say that again?
Uh, it cannot be balanced, right?
It's supposed to be.
But now here we have not got any relationship with the purchases what we have done through the bank account, the other purchases other than for this office supplies and everything.
I'm still not understanding. What are you asking me?
No, because now in the bank account
Mm-hmm.
we have used it for everything, right?
Mm-hmm.
Now here we are considering the current assets, the fixed assets and the bank accounts and everything.
Mm-hmm. 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 Because that's how much money I'm supposed to start off with, right? I can't say 30,000 because that includes everything, and I didn't start out in my bank with 30,000. I only started with 21,625.
I,
So even if I tried it, right? Even if I did start out with 30,000, I'm still off by 1,800. That's even more than what I'm way off for. So that's not a good sign there either.
yeah. But
So
according to the accounting principles, this should be balanced.
it should be bounced correct. And that's why I said I don't know where this extra discrepancy is. The other last times I did this with the class, We were off by $50, $35, off by we were off by $5 at one point. This is a lot because I made adjustment to this class. I changed a few things. Okay, because of the time constraint that we had. I had to make adjustments. Okay, so apparently, with this being said, it's supposed to balance. This is supposed to be the 12,000 that you have in your bank as of June 30th. But it says that I'm supposed to have only 9,000. So I'm missing some kind of money so far somewhere. So again, this is one of the harder ones to understand because this is also dealing with, if you actually look it up on YouTube and whatnot and try to get more information on how to create the cash flows, what you're actually looking is the difference and the change between the accounts. And again, you're converting your accrual basis into cash basis. So again, this is the most accurate of how I can get you to understand how to create it, but how to balance it. Now, I had some students do this on their own for their own business, right? So back then you had to do your own business and they matched. So I don't have a clue what's going on. But again, like I said, me and Mr. Sanchez have been tackling this for 2 years now, and it would never balance. All right. So again, extra credit. I'm not saying do this now, but if you guys ever find the time to ever do that, well, I mean, it's not extra credit anymore, but let me know so then I can figure it where it is. But yeah, it's definitely something you want to learn because this is one of the three. This is one of the three financial statements that is required to have for a business. Okay, so I'm just teaching you how to create it. All right. So with that being said, it is right now 11:35. Let me see. So the next thing that we got to do is properly close out our books so we can do our post-closing trial balance. Now, I will let you guys know this. All the financial statements you have completed will not affect your closing process. All right? This is just you making a projection for the future. This is you just tallying up your hard work so you can see where you are in the company. Once you've done your financial statements, that's it. Nothing is related to the post-closing or the closing process. All right. So again, I will go ahead and give you a little talk before it. And what we're going to do is we'll finish it up on Thursday. And we'll do a quick review on Thursday as well. Okay? So with the post-closing trial balance, now what we got to do is it's all about understanding what this account is. So we're going to be closing out all of our temporary accounts, meaning all of our revenues and all of our expenses. So we're going to be focusing on just the general ledger only. Okay? Of course, when we journalize it, it's a different story. But we're going to be focusing on every single revenue. All right? And what we're going to do is we're going to zero out every single account in our revenues and our expenses. And we're going to zero them all out to our infamous account called income summary. All right? If you were working in the corporate world, this is another fancy term for retained earnings. All right? And what we're going to do here, again, with the business, with corporations, right? It's the same thing, but we're looking at it in different terminology. What you could do with retained earnings is you can either close it out, hold on to it, or you can reinvest it into your company. And in this case, we're a small business, so what I'm going to do is, because my first notion was I reinvested in my company, in my statement of my equity, therefore that is exactly what I'm going to do. I'm going to create my income summary, by zeroing out all of my expenses, all of my revenues. And when I get a credit or a debit balance, depending on what it is, I'm going to invest it and close it out to my equity account. So that's what we're going to be spending tomorrow for. We're going to look at every single revenue account and we're going to close it out. Okay? So, with that being said, if you guys don't have any other questions, again, you will not be tested on how to do the statement of cash flows. The main priority ones I want you to know for the exam will be income statement, balance sheet, and statement of equity. All right? Cash flows, forget about it. Okay?
Can you repeat again? Income statement?
Income statement, statement of equity, and balance sheet. Those are the main three that I want you to focus more on. Statement of cash flows, when we move into QuickBooks, you don't need to do any of that work. It's already done for you. All right. Any other extra questions? If not, you...
We have to submit the plan tomorrow, right?
No. It's due next week. The week after. The last day of school.
I have it on the fifth on my notes here.
No. I just had you guys do... Oh, no. Let me stop